right? We want to kind of use this particular question to prepare the different ledger accounts affected, all of them affected by these particular transactions, right? So this is what we will do, and we'll disregard the part where we're saying we're only entering in the accounts, the personal accounts there. We deal with every other account affected under those circumstances, right? Quickly changing my screen, you may actually want to take a screenshot so that you have this information with you as you follow through with the video. Right. On this particular question, you find that the very first thing we are given, we are told that we have sales on credit to JB 520, T Day 630 in JSOL 240. So we work through that, and then so we're going to prepare the ledger accounts. And the question is 5.5 according to what I've shown you. The first one, we open an account, at least the sales account. So we have a sales account in the general ledger or nominal ledger, right? So remember, we have debit and credit. So we then, on the debit side, we're going to have to not write anything, because when sales are increasing, remember, they are credited. So we are going to go into this particular account on the credit side, 2018. This is September, so September. And then we write JB, okay, account 520. All right, in the appropriate columns. And then we also have T-Day. We have 630. Well, they're using pounds, but I'm going to be using dollars. JSOL 214. Right, we've entered these ones. Now to complete the double entry, we then have to record in the personal accounts of those individuals, and these ones are clients, customers, which means they are debtors because we sold to them on credit. Remember, 3 accounts at the most on one page. So we move on to go and talk about JB account, and these accounts are found in the sales ledger. In the sales ledger, personal accounts of customers are found in the sales ledger, while the sales account itself is found in the general or nominal ledger. So we're going to debit, so that's 2018 September 1, and we write sales for JB, which is 520, like that. And then we open another account for T-Day. So we go there, T-Day account, and make sure you leave enough space so that you can then be able to balance off these particular accounts. All right, let me just increase the space. So T-Day account on the debit side as well, because when debtors are increasing, they are debited according to the golden rules, right? While we complete the double entry, 2018 September 1, we have sales of how much? 630. So 630 over there. We then also move to the account of JSOL. So JSOL account, we open that account, and then on the debit side, 2018 September 1, and these are sales coming from the sales account. We have $240. Right. If you check to see, we've completed our double entry. For every credit entry, there should be, and these are credit entries for JSOL, TDay, and JB, which are personal accounts of debtors. For every debit entry, there should be a corresponding credit entry, and then they are credited in the sales account. Right. We move on to day 2, purchases on credit. D Blue 390, F Rise 510, and then P Lee 280. So we need to open the purchases account. So we move, and over there we then say purchases account, and the purchases account is found in the nominal or the general ledger. And when purchases are increasing, they are debited. So we can go and we say 2018 September 2, and then we have D Blue, and then how much? 390. And then we have F Rise. We have 510. And then we have P Lee 280. Now, to complete the double entry, right, we need to go to D Blue, F Rise, and P Lee's accounts in the purchases ledger. Okay. So we go on. We have D Blue's account, D Blue. On the credit side, because when creditors are increasing, they are credited. So September the 2nd, we write purchases to complete the double entry of 390. And then we open another account for F Rise. So F Rise account, which is a personal account of a creditor found in the purchases ledger. We write on the credit side 2018 September 2, completing the double entry and following the golden rules that state that when creditors, and these are creditors, are increasing, they are supposed to be credited 510. And then we open the other account of that other individual, P Lee. So we have P Lee's account. On the credit side, 2018 September. Remember, you have a date column, details or narration or description column, and then we write purchases, and the date there is the 2nd, and the purchases are 280. Right, we've completed the double entry. Okay, we then go on to date 8. We have sales on credit to TDay and LHOP 418. So we open LHOP account because we don't have that account, and this account is going to be found in the sales ledger. So LHOP, right? When we're writing though, we're writing accounts as they are given us as the transactions appear, so that we don't mix up. But we will actually be recording these books in the appropriate books they're supposed to then be entered, the accounts that is. So LHOP there, we have sales on credit of 418, which means it's increasing our debtors, and LHOP is a credit customer, a debtor found in the sales ledger. So 2018, September 8, we write sales, okay? How much? That was 418, 418, right. We then quickly go on to the sales account at the top there, sales account. Where is it? Over here. We know we also told that we sold to T-Day, so we write T-Day. This is on the 8th. This was on the 1st. Okay, this is on the 8th. So T-Day, how much? 640, 640, we record, right? And then we go to T-Day's account, 640. That account we already have. So 640 there. We're recording on the debit side because when debtors are increasing, they are debited. Right, sales. Remember, we've already recorded LHOP's account in the transaction for LHOP in LHOP's account, but we haven't in this sales account, LHOP. How much do we have? 418. We've completed the double entry in that regard. And then we go on to the other things. Purchases on credit from F. Rice and 92 and R. James 870. So we go to the purchases account. Over there, we write F. Rice. And this is on the 10th, right? How much? 92. And we go on to F-Rise account, F-Rise's account. Over there, the 10th purchases, we've completed the double entry for F-Rise. But then we have another one, R. James 870. So we got back to the purchases account. We then say R. James as our narration or description. How much? 870. We don't have R. James account. So what do? We open it. So we open, right. We open R. James account. R. James account. And what did we do? We purchased from them. So when creditors are increasing, remember, they are credited. So September, this is now still the 10th. And we write purchases of how much? 870. Right. And then we go on to on the 12th, returns inwards from JSOL and T-Day. Right. So we open the returns inwards account. Or the sales returns account. And when this account is increasing, it is debited. And it also then shows the movement of our stocks anyway. So the opposite of the sales account. So we then write September. This is the 12th. So the narration is JSOL. How much? 25 on the debit side. And then T-Day 190. And to complete the double entry, we go to these accounts, JSOL and T-Day account. There is JSOL's account. We have to reduce his account, is a debtor, and when debtors are decreasing, we credit. So 2018, September 12th, we say returns inwards or sales returns. How much? 25 for Sol. And then we then go on to 2 days account. You return goods to us to reduce the account of the debtors. Debtors are credited when they are decreasing. So September 12th, and then we write returns inwards. Okay, and how much do we have? We have 190 to complete the double entry. Remember, for every debit entry, there should be a corresponding credit entry. Okay, and then from there, we move to the 17th. We return goods to F. Rice and R. James. So we need to allocate F. Rice's account. There it is. When creditors are decreasing because it's a liability, they are debited. So 2018, September 17, F. Rice, we return goods $12, worth $12. So what do we write there? We write purchases returns, or what we call returns outwards. Okay. So purchases returns. Right. We also locate the other individual, R. James. There it is. So 2018, September 17, and then we say purchases returns or returns outwards. How much did we return to this individual? 84. So 84 we write. Right. And then in that account, we need to remember to open. We need to remember to open the purchases returns account. So purchases returns account or returns outwards account. And it is increasing, it is credited. So 2018, September the 17th. And then remember we have F. Rise of $12, F. Rise. Okay, remember I said we're using dollars and not necessarily pounds. So we then have R. James, 84 years. Like that. We have sorted out on the 17th, and then we go on to the next. On the 20th, we paid D. Blue by check 390. We paid D. Blue by check 390. Right. So what do? We open the bank account over there. And then what do we have? When we're making payments, we credit the bank account and even the cash account because that's the payment side of things anyway. And bank and cash are assets. When they're decreasing, they are credited. So 2018, September the 20th, we say D. Blue. How much? 390. All right, that's what we have. And then we are told on the 24th, JB paid us by check 400. So on the 24th, 2018, September, 24th, we write JB. Okay, how much? 400. This account was not needed. Why? Because we don't have any like balance BDs in this particular account. Okay, so when it comes to balancing off, we are not going to be balancing off this one. Let's complete the double entry for the 20th of September and the 24th of September. We go to DBlue's account, DBlue account. Over there, we paid them because they're creditors, and when creditors are decreasing, we debit. So September 20th, I now need to complete double entry for this, and then I'll write bank. This was 390. Okay, which means we paid them off, so to say, nothing owing. You see when we balance off the personal accounts, and then the one for JB who paid us 400. We need to quickly locate that account. JB, there we are. We're going to write September, or rather 2018. 2018, September the 24th, we say bank 400, which means they still owe us something. Anyway, we go on to the 26th, R. James, we paid them by check. So we locate R. James, I think it's right at the bottom. Over there. We paid them by check. So to reduce what we owe to them, this is on the 26th. We debit the account. So we say bank. As remember, checks are processed through the bank. We then write 766, and then we go on to the bank account, although on the question it was not required to be done because information, right, that we are not given. Anyway, we can enter and show you how it was supposed to have been done, assuming that the bank account was required. So we then write R. James. Is it 76? Yes, 766. And this is on the 26th. Right, completed double entry. Remember, bank is an asset. When it's decreasing, it's credited. Then we have on the 28th, JB paid us by cash 80. We don't have the cash account, so we open that and we say cash account, and we are not given any balance BDs on this one, but cash is an asset increasing, it is actually debited. If it was required, we would have done it this way. So this is the 28th, and we write JB, right? Cash is increasing, so therefore we debit it as an asset. We go on to JB's account, who is a debtor, and when debtors are decreasing, they are credited according to the golden rules. We over there and we write the 28th, and then we say cash. That's the narration. It's coming from the cash account. How much? 80. Over there. And then to finish up with L. Hopes, who paid us by check for 18. So we go to L. Hopes account. Over there, and when debtors are decreasing, they are credited. So September, that one is on the 30th. They paid us using a check processed to the bank. So the narration is bank fee, how much? 418. Right. We go to the bank account if it was required to be prepared, and then we debit because we're receiving 418. Right. And this is L. Hope, and it's on the 30th. Right. Given this, we have finished to record the transactions using the double entry following the golden rules in the books of accounts, the ledgers. All right. So let's kind of, according to the question anyway, let's prepare, or rather balance off the accounts we are instructed to balance off. The other ones, just seeing that we not given full information, so we are not going to be able to balance it off. But if we were, our sales in under these circumstances, we could have balanced it off by comparing the debit and the credit side, and we see that the debit side is smaller, and then whatever total we get, that becomes the balance, CD, and we complete the double entry under those circumstances. Remember, the question states that enter the following in the personal accounts. In personal accounts, you're talking about the creditors, the people who sell goods to us or offer services to us on credit, and then debtors accounts, the clients, customers to whom we sell our goods to on credit under those circumstances. And the debtors and creditors accounts are the only ones that are needed. Debtors are found, remember, personal accounts of debtors or our customers, clients are found in the sales ledger, while the personal accounts of the credit suppliers are going to be found in the purchases ledger. Anyway, let me balance off this one. From this, if you check to see, we have 520 on the debit side, and then we have 480 on the credit side, which means this particular individual still owes us money. So we can say September 30, and then we say balance CD credit down, which means they owe us money. Okay. Take note that the figures are written in these particular total columns. So 520, that should be 520. So if you say 520 minus 400 minus 80, you get 40. So we have 40 over there. Don't forget to use the double underlinings, okay, to show that there is a debit in the credit column. I've decided not to necessarily use those ones in mine because I don't necessarily have a ruler, or at least I still haven't figured out how to kind of underline using straight lines. So 2018, this is now October 1 balance. BD brought down from the previous period, 40. You see BD, CD, the same figure. Right, 40. That one has been balanced according to the question. Don't forget to demarcate your columns for the date, for the narration, and then for the amount columns on both of the sides or on either sides. Right, we move on to the next account, T-Day. If you check to see, this one, the debit side is bigger, so September 30, balance CD comes on the smaller side, and in this case is the credit side of how much. That's what we have to figure out. Right. I think this should be 1270. That's the total, 1270. And then from 1270, we have to remove 190, so 630 plus 640. We get 1270 minus 190, 1080. And then it balances. So 2018, October 1, because this is the next period. BD, right, 1080. And then we go on to the next account, JSOL's account. Credit side obviously is smaller, so balance CD there. Carried down totals. Don't forget to demarcate your columns and sides, so to say. Right. Obviously, that's 240. The total is 240. So 240 minus 25, you have 215. That's how much they still owe us. So when we then say debtors have got a debit balance, that's what we say. Say they end up having a balance BD on the debit side. Right. So remember, this is now October 1 balance BD 215. Okay. Tallying with that, don't forget double underlinings at the center there, demarcating the sides and demarcating your columns using single lines. And your columns should not be any wider than the width of your ruler. All right, so this is pretty much for the debtors. Unless, of course, we have another one. Okay, then this one now, it is balanced off. If I want, I could have put double underlinings on those figures and it was done. But I can do it this way as well. 390, nothing to balance off, just totaling it. All right, and we're not owing these creditors. And then F rise now, debit side is smaller. This is now the 30th. So we then write balance CD on that, on the smaller side. Balance CD of how much we are still to figure out. So we have 510, and then we also have 92. So 602, that's the total. 602 minus 12. We have 590. That's the balance CD. All right, so this is now 2018 October 1 balance BD brought down from the previous period. Check to see how much, 590. All right, that's what we have. On this one, PLE, we can clearly see that this side is smaller. So balance CD on the debit side, meaning that we still owe them money. Right, we have 280. 280. I'm quite sure that's easy to figure out. And that 280 is our balance BD as well, coming from the previous period, brought down. Right, 280, that's done. And when we say credit as a credit balance, which means most of the time it's normal to have it like that, unless of course we've overpaid them. But normally we are owing them. And then on this one, these two sides are the same, so no need to have a balance CD, more like that. That's how we do it. And then if rather R James account, we have 84 and 766. We have 850, which means we still owe them $20. So we can write, that was the 30th. We can say 30. And that's a balance CD. That's how much we still owe them, okay? Otherwise, 870. 870. And then the lines are supposed to be at the same level, not like a different level. So 2018, this is now October, balance BD, how much? Don't forget your lines there, October 1. Maybe I should just make sure this is kind of clear. So balance BD brought down from the previous period to 20. Okay. This returns inwards account. We could have balanced it off, but we are not told to balance these ones off. So we leave them as they are according to the instruction of the question. If we try to do so and we don't have information that is enough, same applies with the bank account and the purchases returns account, we then are going to land ourselves in trouble. Things are not going to work out. Same applies with the cash account. So we are done with the double entry for the personal accounts of both the creditors and the debtors. That's pretty much it. As you can see, all right, that's how we're supposed to have done it. Right, done.